Hey everyone. All right, let me get these links shared out and then we'll get started. Give me just a minute or two. You know what? I should share this on Telegram as well as Discord. Sure are your 3-year-olds watching? I'll keep it family friendly. All right. So we're going to take a look at Bitcoin first. Take a look at order flow and a couple things here. We are actually testing our major point of control right now. This move was primarily a short squeeze. The catalyst, obviously, the Grayscale announcement. I imagine a lot of people on that news just wanted to get out of their shorts. So we see, yeah, I'll just show. We're at the point of control here. There are some kind of technical levels here. We'll look at a couple things. But if we go over to EXO, we can see this huge decrease in open interest. This 5-minute candle had 150 million volume in it. So obviously a lot of shorts closing here, just a straight down decrease in open interest on this whole move up. We see some longs opening as well near the top, consolidated, have another impulse up. And we see a mix of longs or shorts closing, longs opening here, but certainly some volume coming in. We do have some slight bearish divergences forming here, the POC locally. So this is just saying that, we have aggressive longs coming in relative to this high. An increase in about 1 million volume, a little less between these two highs. But anyways, we're making a lower high. So I do have a small short from here. I did try a short earlier. Let's go over that really quickly. But I am maybe interested in scalping some of this volatility. And we'll talk about some of the levels below. But I tried to short here. So when price was consolidating, I was interested in a scalp short if we could come and take this high and reject, just with a tight stop. I got a trigger, but then got stopped out. So there's a couple things I want to note about this move. One is I'm not assuming that it's going to be a fake out. I'm not assuming that we're going to retrace this entire move. I'm open to the possibility that this is a start in a continuation. So I'm interested in longs. And there's going to be short setups and long setups along the way. But what this price action does remind me of, I was actually thinking about this yesterday, how similar it was. This was a long trigger on, I actually have a long still from down here, but this was a long trigger into this retracement, sweeping this low. And as we were consolidating here, I was starting to think, man, this sure does feel a lot like this. So we have this low, this wick retracement, and then we consolidate here at this local golden pocket and get this big impulse off of it. And I was thinking, it's the golden pocket from the second pivot in this range. and I was starting to think how much this resembles that. It did end in an impulse. But yeah, obviously, I think the catalyst here makes sense for the impulse. We did have a nice move off a technical level. ETH also got quite a nice move off of a technical level here. Almost the exact same setup. This along from a sweep and a reclaim of this made a lot of sense. The only issue is right before the grayscale kind of catalyst there, we did have bearish divergences forming here. We saw some local rejections. So that did shift the local probabilities to lower, but all it takes is a $150 million 5-minute candle, a big news, everybody wanting to close their longs. Sorry, their shorts, and you have this big short squeeze. Okay, so there are, I think in terms of just like trending ideas, the clearest long setup that might have a higher probability to hold would be to come down and retest these old range highs. I actually want to look at a couple things here. So depending on where our high comes in, there might be some fib confluence here as well. But the idea would be we were in a range, we broke in the range, and you could come back down and retest these range highs. So that would be an interesting long setup, but also open to some local structure here. So as we form this structure, there's going to be several, I guess, kind of common local setups for a really aggressive continuation that could happen. Probably the most aggressive idea on a low time frame would be if we could come and sweep this local consolidation low into this golden pocket. That could generate another leg up. There might actually even be some influence here for a channel depending on when it takes place. It doesn't look like it unless you drew something like this. Doesn't really make a lot of sense. But anyways, in terms of low time frame, I'd be interested on local retracements depending on the volume. The next idea would just be to come and take these lows. So these would be the two local ideas. And then beyond that, it would be coming and retesting our old range high here. So these are the three kind of key ideas, I think, for continuation. The problem with just longing, say you're going to, say you're expecting a trend continuation here. The problem with just longing now is, well, you're obviously very late in a move, right? And where's your invalidation? If you are going to long here, is your invalidation here. All of these lows are quite likely to get taken at some point. So it doesn't really make a lot of sense to try to long up here. Although we could just continue up and you might just get away with a long. So waiting for some of this local structure to be tested makes a lot of sense in these moves, but you don't always get it. I do have an Elliott wave count idea that sure is looking pretty good right now. I'll just cover very quickly. But there might be some scalp setups during this live stream that could be kind of interesting. I could explain my thought process behind. So this was a setup. This was an idea. It's very, very speculative that I had up back here months ago. And the idea here was actually, I was thinking, what would be an Elliott wave structure that would work, that would make sense for us to take this key fib. This is a key level down below here. I guess I can just turn this on. this was my thought process when I was looking for this, to have this impulse without tapping this key high, take this key low into this key fib, and then take this high. So that was the idea behind looking for some of this. It's a very complex count, and the idea was how can we, and I was coming up with it here when we had this impulse. What would make sense to take this high without taking this high into this low and still see this level way down here? So it would be something like this. It's a little complicated, but I am keeping an eye on it, especially now. And the idea would be that we'd have an impulse up through these highs, and then we'd have our bigger sell-off into that $1,700 region. So on a higher time frame, taking this high and rejecting is certainly a swing short I'd be interested in, down into this $1,700 region. I mean, this looks quite strong, this move, especially on that volume. So I probably favor longs over the coming days, looking for ways to get in on this uptrend with tight invalidation. All right, so let's just do a little bit of order flow analysis here. Something is going on. It wouldn't let me move. All right, so we're seeing some longs open, and this bearish divergence just tells us there are people limit selling here. So that doesn't necessarily mean shorting. It could just mean offloading limit or long positions from lower, limit selling them. We're seeing an increase in open interest on this 5-minute candle. It's not a big positive delta here, but I mean, these are very high volume candles even up here. So we had the big $150 million 5-minute candle, 45 million, 36 million. I mean, these are very, very high volume candles. This next leg up, 39 million, 16 million, 31 million, 40 million. So this is very high volume right now in play on these low time frames. So one way of looking at this is it's a high volume break of our local range. But it's also a place where a lot of people could get wrecked, both long and short, right? You have a lot of market participants. You could get a lot of volatility here. And you also have to pay attention for slippage on these big impulses. So this is a local bearish divergence forming. You could say it's, if you start rejecting, it's more valid. Like, while the impulse is happening, it's not a technical bearish divergence unless you make the lower high. And the bearish divergence is, again, just saying that there's aggressive buying coming in here, but also pretty heavy limit selling. And the reason you look out for something like that is bigger traders and bigger entities like to offload their positions into rallies like this. High volume, people buying into this big rally, coming late in a move, and they like to sell into it. So we're getting a nice rejection off this bearish divergence. It's at the local 786 here. This is not where I would ever personally want to be caught longing into a move like this, because you're risking essentially longing the top of this consolidation. Of course, another impulse could come, but with bearish divergences, it's not a long I'd be interested in. I do have a short here. So I'm kind of treating it as a scalp at this point. I took it a little earlier. And it's smaller size. I'm risking 0.5% if I get stopped out. So we can see here at the top of some of these candles, like we have a 1.5 million long at the top of this wick. Here, a 1.1 million, 85K. Certainly more longs coming in at the top than shorts. And we have an increase in open interest, so predominantly longs rather than shorts closing. Certainly, you know, with this volatile price action, you can see a lot of potential to get trapped. But so one thing that you'll note here is on all these little local pivots, you'll see at the very bottom of the candle, 1.9 million selling here. 800. You see these big little profiles of selling right at the bottom. So that can either be shorts opening, or it can be people who long the top of the candle getting stopped at the bottom of the candle. So yeah, this price action's, like any time, is chopping people up. Again, you had that here too, 3.7 million, 752K, 1.1 million, 3.7 million selling right at the bottom of this candle, and then you have another leg up. So this would be predominantly people longing on the way up here, getting stopped out. And then right at the bottom, where you have a peak number of people stopped out, you get another impulse higher. And probably some of these people then coming back in up here and chasing that move again. And sort of the psychology of this is people will do that, they'll get stopped out, they'll get frustrated, then price will continue in their favor, they'll keep doing it, and then eventually they'll either put their liquidation stop losses much lower, frustrated that they keep stopping themselves out on local retracements, and inevitably that's the time that price does actually come way down and wrecks them. But I think looking good for a retracement here. You know, we have this local structure, local bearish divergences. This is all stuff you'd want to see, but also keeping in mind that we have the high time frame point of control here. It's also not quite a retest here. Are some levels above too. It's funny because I where is this? I actually had these levels marked out. This is a key idea as well to the upside. That comes in kind of around the monthly close. I had these levels marked out. Let me clean up this chart. For kind of a key idea on this impulse, just saying if we broke out, because I was interested in shorting a sweep of this wick high here, which was a daily candle high. We just double topped it. But anyways, I was saying if we broke out, key ideas would be up into this region at the POC, and then we have this kind of trending structure at a major fib here and a local daily candle high. So of course we ended up getting a retracement, and I was interested in the longs on this retracement. Did end up scalping shorts here as well. But anyways, I think this structure is all still in play, and this level around 28,700 to the upside is a key idea to break and go to lower time frames. What would make this level very interesting is if we tap it as we intersect with the trend line, which seems very reasonable at this point. You know, we're talking in the next day or two, so you know, maybe we see some of that volatility, something like that. maybe we get some consolidation and we either break through that level or we do reject. So I'll probably be looking to trade around these levels as well over the coming days. All right, so somebody's saying, so you say short from 28.7K. It's not 100% that simple. Like I would like to watch as that level is tapped, if it's tapped, order flow and see how price gets there. Is there any kind of reaction? Does price just blow through it? Because I like to trade with market orders. Obviously, if price just goes straight through the level, I'm not going to short it. Like if you have a limit short there, people trade with limit orders and that's okay, but you don't have the benefit of seeing if price even reacts to the level. Because it's one thing to have a level on a chart. It's another thing to see a reaction, right? So you could, like this idea on ETH, I actually talked about it a few times because ETH kept front running this level. So in the Discord, we had this low and this low, and the idea was to take these lows into this key fib, and we'd front run it. We even had a little local impulse here. Front run it. We front run it again, and so we had like almost a quadruple bottom here. And taking that low seemed somewhat likely. But anyways, so you could have the idea of a long from a sweep into this key level here. But it's nice to see the wick. It's nice to see the reaction coming off that level instead of just this. So you can make a decision. So anyways, the other thing is using risk management. So one thing I think probably, like if you're not in the Discord, I don't want to assume you know kind of the fundamentals around risk management. But I think a lot of people on Twitter will be looking for ideas, trade ideas, and their idea is I'm either going to long or I'm going to short, and no matter what price does, I'm just going to stay in that trade until it goes in my favor. So like if you're a new trader, it's very common to just not want to accept a loss. So instead of cutting a trade if it's not working, understanding your invalidation, saying, well, I'm just going to take that 1% loss or that 0.5% loss. You can't accept a loss and you think, you know, I've been waiting for this trade set up. I saw it on Twitter or I saw it somewhere. I'm just going to sit in this short, and price starts going against you. And you think, well, it must at least come to my entry. And it never does. And then you get absolutely destroyed. So all I would say is this. I am interested in shorting these levels, but I'm going to short them with risk management. I'm going to cut my trade if it's not working in my favor. Similar to the short I'm in now, I'm going to cut this short if price starts breaking out, and I'll just accept the loss. You can't enter the market without risk. You can only manage your risk. And the idea is when you accept those losers quickly, you can consistently have, this is right on the PLC. This is a very nice technical rejection here. The idea is you should consistently be making more from your winners than you're losing from your losers. Like if you're, if your short looks like this, say back down into this level, you make 5 times more if you win than you lose if you lose. And you keep your risk reasonable. You know, it could be 1% of your trading account, 1.5%, 0.5%. Very interested to see how price reacts to some of these first local retracement levels. And I want to talk about like a loss I took specifically where I had to cut the trade. So for example, trading in this range, you know, you can get, there was really clean long and short setups in this range, like sweeping these lows and sweeping these highs. I didn't catch all of them. But so you're trading this range and you're getting these nice trade setups. Well, you look at the range as a whole and you say, well, I'm going to long the sweeps of the lows, short the sweeps of the highs. I understand the range is going to break at some point. I'm going to take a loss. I'm not just going to sit in that trade. And the same thing goes here, right? There was nice long setups, sweeping these lows. This is the 4-hour chart. And then you come back down and you sweep the range low again. And you think, well, I'm going to take that long, but I'm also going to accept that I'll cut it if we break down the range. Like, I'm going to take it for the same reason I took all these trades. And that reason gets you into winning trades. And it's going to get you into losing trades, but your winners should be bigger than your losers. So, anyways, and it's important to cut it and not assume that price has to bounce, because something like this happens and we have one of our biggest kind of liquidations in a year and a half, and you just want to be out of your long if that happens and move on to your next trade, which for me the next trade was sweeping this low. And you apply those same things on low time frame setups. What's the structure you're trading? Where's your invalidation? I think invalidation here is kind of tough. Like, we have to go to the 1 minute chart to sort of structure scalp ideas here. Also, I'm not recommending anyone take these trades. I'm just demonstrating how I view the market and what types of things would be trade triggers for me. But something like this would be kind of interesting as a potential scalp. It would be the most aggressive structural long. I mean, technically longing a sweep of this low would be more aggressive. But if I was to break down this price action, again, this would be the most local level I'd be interested in trying a scalp. If we just break down this level, wouldn't be interested, because just the principle here is we have this impulse, we had a little retest here, a retracement, and another impulse. So taking this low into a key fib is an idea, but you want to reclaim it. If we don't, well, you're probably going to take the rest of this impulse. Then you have this pivot low. And so you could avoid this long idea completely if price just breaks through this level and gets no reaction. If you're going to scalp it, for me personally, I'd wait for that wick and for price to suck back up above the level before I consider opening a trade there. Ideally, you'd like to see some nice volume coming in there as well, which I could speculate seems likely. This is the 1 minute chart, by the way. We're just looking at 1 minute time frames. But if we break down, looking at this level, oops. If we break that down, looking at this level. But again, so invalidation here, there's two ways to think about this on all of these setups. You either trade it with wider invalidation to take out some of the possibility of getting stopped out on just normal volatility, or you trade it tight. You just say, you know what, my setup is very technical here. It's a scalp. I want to see this, and I'd rather just trade it with a really tight stop loss. It either works or it doesn't. Understanding I could get stopped out and then price could go back in my favor. Instead of trading it as like a 2R setup, which is still reasonable. You could say, I'm not going to close this trade unless we take this pivot low. But my thought process would be that if this starts happening, these lows are probably going to get taken. Not always, but probably. I think invalidation is a little tough structurally here as well on a retest of this range high. I'll go zoom back out because there's no clear structure here. We just have a straight up candle. So you have kind of, again, a couple options. You can try to trade the level. This is just my thought process. Try to trade the level with a little bit of a wider stop to account for some variation. And basically, as soon as there's any kind of reaction on the idea, you just take the trade with I wouldn't say a random stop, but just giving the level some room to breathe. Or depending on how price gets there, like if it's structured kind of like this and we have a downtrend, and then you have a local sweep, then you could trade it on a reclaim with tighter invalidation, something like that. So it depends on what local structure you have available. If any. Obviously, if price comes straight down here, there's going to be no local structure. There's probably going to be a lot of volatility and a very quick reaction if we get a reaction. So, just having kind of an idea for size in that case with an extended stop, looking for a continuation. All right, so let's just look at order flow really quickly. Again, we're getting a nice reaction, nice move down off this bearish divergence. So we can see CVD, that's the green line. It's the cumulative volume delta of market longs, making a higher high relative to this high, price making a lower high. So it's just, if you're looking for a short, even off of a higher time frame level and price is consolidating at that level, it is a nice thing to see at that level with some consolidation, because it at least shows you that there's some limit selling at that level and absorbing at least several $1 million of longs into the level. But see, look at this impulse. Lots of potential for volatility here. Certainly, for me personally, wouldn't want to get caught like if I was scalping, trying to scalp like a breakdown short down here. Order flow is interesting. 851K, 137, 165, 303. An increase in open interest here. So longs opening into this move. What is this weird wick that just appeared there for a second but disappeared? That was weird. My guess is, and of course I don't know the future, this price action is kind of priming to chop some people up. Certainly seeing a willingness for longs to open here. 4.4 million positive delta in this candle. 1.1 million. So a candle like this has the potential to wreck some longs if we can't get continuation here. A decent amount of longs considering just local volume opening into this candle. And it's just, what's important to note here, like you can kind of see it in the profile, primarily market longs, increase in open interest. But so what's important to note here is just the only reason we know there's a little bit of resistance here is because for price not to keep moving through these levels, we know there's limit selling here. So, but if you're a big institution and you do want to offload some of your lower long positions here with limit selling, you kind of want price just to range here. You want people to keep longing into your selling orders. and you can offload those positions. And even if we see like a local retracement here, the idea could be you would expect a lot of volume to come in down here. So you could sell off some of that position, let the market come back down, and then open those longs again. Because even a move like this is 4% away. Obviously, the nature of these kind of scalp ideas as well is they're very low time frame, and if you're interested in a setup like this, you have to be willing to execute very quickly if there's a reaction, and you're either going to probably get stopped out very quickly, or the trade's going to go in your favor very quickly. Because just a little bit of hesitation, and especially in these really volatile environments, price can be up 1%, 0.7% with just that moment of hesitation. And so instead of a setup that looks something like this, that's close to 4R, you suddenly enter late and your setup looks like this, a 1-to-1. Just interesting to always note, if you watch some of my low time frame analysis before, typically technical levels getting interacted with here. So just a local golden pocket from this high to this low. Price impulses into it. Get a little sweep of these local highs on the 1 minute. And anything can happen here. I'm just doing order flow analysis. I'm not predicting the future. But we do still see some bearish divergences holding here. And we're seeing certainly some resistance with this 9 million volume 5-minute candle, 4.8 million positive delta. Lots of longs opening here, but some limit selling. But to put this all in a broader context, this is really the delta here between this high and this high is about 2 million volume on this exchange. That's not a lot. These divergences can show some early signs of, you could call it distribution or something like that. But at the same time, we just had a huge 150 million volume candle break of this local range, and shorting into this, you are kind of fighting a big trending move. So like you could say, like say you're short from up here, and I am short here, but I'm perfectly willing to accept a stop loss, and you have bearish divergences, but then price impulses again. You could think, why is price going up again? I mean, there is some context here, which is just these are slight bearish divergences locally on the 5-minute time frame into a much bigger impulse. This tool is called ExoCharts. There's lots of order flow tools. There's one called Coinalyze.net where you can see some of this stuff for free, or GoCharting.com. You can see some of this stuff for free. Exo you pay for. And you can kind of build some custom templates. There's lots of different styles of templates here, where you can look at different things. All these imbalances wiped out. Can look at ETH as well. Let me load up the ES Mini really quick. We'll go back to TradingView while we look at that, or while that loads. So something like the ES, like the data feed for that S&P futures, like that's $100 a month. Exo's like, I think it's 40 euros a month maybe. And then you can pay for other data feeds, like Bitcoin Bybit. That's comes with the subscription. But if you want like the CME data feed, which I'm about to pull up, that's $100 a month. Yeah, so if we go to a low time frame here is where we were seeing bearish divergences. Like here, this is what made this short interesting. And for me, this was a scalp into the lows, and I did take this long. And then we saw these bearish divergences continue. Here, there's bearish divergences. I did take a short here. We got this local move down, but here you could argue that some of that extreme bearishness started getting negated. We saw some heavy selling and a pretty heavy big short relative to this local range, $3.3 million short into this candle. See the big decrease in CVD, and then an impulse squeezing price up. So the extreme bearishness here, although we didn't have a bullish divergence against these highs, the extreme bearishness sort of got neutralized a little bit on these retracements. And this was a bullish divergence between this low and this low. CVD making a much lower low. Oh, I wasn't. All right, well, I wasn't on the right screen. This was the extreme bearish divergence here locally. Got to move down, and I did scalp along into a sweep of this low. That was a target, but we had more pretty extreme bearish divergences locally here. This is what I was pointing out. Got these moves down, and then here, although we didn't have a bullish divergence against our major lows, some of the extremeness of this bearish divergence neutralized this morning. And here we did have a local bullish divergence form as if this is the $3.3 million short I was mentioning, opening into this low, and we see CVD making a much lower low versus this pivot low. So this is a local bullish divergence, just showing that there's limit longs here locally holding price up before this impulse. But again, it wasn't a high time frame bullish divergence, but it was between these two local lows. Yeah, I would say there's someone's asking, do you teach how to read order flow in the Discord? Yeah, so there's I think there's like 5 educational videos on order flow or components of order flow. Maybe it's 4. And then I talk about it almost every day. I actually can't remember how many like topic specific educational videos there are. They're about 15 to 20 minutes long each. I think there's 30 of them. And then the idea is I sort of do live analysis every day, sort of reinforcing those ideas, how to actually interpret them on a live chart, at least to the best of my abilities. Okay, let's pull up the CME feed here. So much selling. So this is something, this was one of the reasons, like if you followed my S&P analysis over the last year, I was looking for a push up. And so just pointing out these similar concepts here, where you just see really aggressive selling into this range, getting absorbed. So certainly was an idea for a move up. But it is interesting, just, I mean, this makes a little bit more sense because now at least price is going down with the selling. So there's heavy market selling and we're seeing price reacting to it. It's quite bullish when there's heavy selling and price is making higher lows and grinding up into heavy market selling. Here, price is reacting to that selling. And again, this idea was back here in December, but here when we're consolidating, we're seeing that really bullish absorption here. Certainly gives some order flow confluence to the idea of grinding up higher to these targets. If this idea is valid, then we are maybe in for a bearish year. But there are some ideas of pushing and taking these highs as well. But this reaction locally so far is quite nice. Yeah, I've used Sierra Charts. I haven't used it in a while. Sierra Charts isn't it free? Is Sierra Charts free too for just like your basic data feeds? I think there is something you can pay for there, but I think some of it is free. But it can be really interesting to watch order flow here when there's really heavy volume because it can become a lot easier to see what's happening to people. As more positions are opening and closing. I'm actually going to go to the 1 minute so we can really see when and where exactly these orders are coming in. So it's going to be it's kind of interesting to see. It'll be interesting to see if this is about a 200K short. We see an increase in open interest here, right at the bottom of this 1 minute candle, and then price reacts off of it. Be interesting to see even if that gets stopped out, like how aggressively price is punishing little local shorts here. Just working on building a little bit of context for this local structure too. Sort of forming a little triangle. Something like that would be kind of interesting. So right now, like locally, how far price goes really hard to say, but as price starts consolidating like this, and if it doesn't reject here relatively quickly, coming up and testing some of these levels becomes a little more likely. Just either just want to reject here, still at this local golden pocket. I'm already in a short, but just thinking about how I would trade this if I wasn't in a trade. Get rid of this. So technically this would be you do have these little local lows to sweep, and this would just be like almost a reclaim of our major 618. If we bounce from here, that's probably not a local level to ignore. ETH does have a local golden pocket above us. I'm kind of curious to see what the 786 is. Yeah, structurally, this would be a really interesting short on ETH, but I'm going to, it almost looks like this would interact. In about a week. Yeah, so the reason that like you wouldn't necessarily expect a deeper retracement here, say something like ETH, we have this local structure, we've broken out of it, this is a clean break, we have no structure here, no structural resistance rather, and it would be quite reasonable to suspect that price could be targeting the origin of this impulse for liquidity above these highs. And we have all these daily highs where we consolidated here before we rejected. We'd imagine there's going to be quite a lot of liquidity up there, looking for some technical confluences. So something like this could be quite interesting. Well, yeah, so that would be, let's get rid of some of these old structures. I mean, this would be quite interesting because you have this idea of taking these highs, and if we did, this key fib retracement would come in right at the origin of this impulse. So you could see something like that. Price comes back and retraces that impulse before another leg up. I'm probably leaning towards something like that. You know, if we get some retracements here, retesting the range highs again here could be interesting. This would be quite a clean setup for a long on ETH. So that's something I'm going to be looking for as well. And again, it's just reasonable to think, unless price breaks down here and falls back into this range, it's reasonable to expect higher. And where's the liquidity above? Well, there's no structural resistance here. The clearest higher time frame liquidity is coming and sweeping all these highs, which just so happens to align perfectly with our major 618, possibly right into this, didn't have that drawn quite properly, right into this kind of descending parallel channel idea. And maybe, depending on how the rejection comes, you're back into the key retracement at the middle of this channel, sweeping at least this impulse low. Similar idea here on Bitcoin. Let's just group this all into some local analysis. This would probably require a push to the 786. So we have key levels here on Bitcoin, but what's not as interesting is they're not taking any key pivot highs. So like if we pushed up to the 786 and broke this trend line. All right, I'm going to do something that's very speculative and a little complicated, but I'm going to start thinking about the timing between these two levels. So let's just say Bitcoin or ETH pushes up here. This would be around September 6th. Let's say 5th to 7th. Be right around here. Give or take a day. There's a really high volume area on Bitcoin there. It's a potential confluence. So maybe you see some consolidation under this trend line, and a big impulse breaking that trend line into this level. It happened a little bit quicker than this. And the impulse, I'm just going to look for kind of some timing confluences here with ETH. Be taking these highs into that parallel channel. So I'm just thinking about the correlation between ETH and Bitcoin, both in just a potential timing confluence. Like if ETH is here by September 6th, it's about 10% away. Bitcoin would be about 8% away. Could make sense. Yeah, so basically what I'm trying to think about here is over the coming week and a half, I'm probably going to take some shorts, I'm going to take some longs, trying to think about what makes sense for targets and how I want to treat those trades. So let's just say we get something like this on Bitcoin. And we do get a retest of this range. What could make a lot of sense to target up into this level? And depending how price gets there, there might be some local structure to short around. Take profits on the long. But the idea would be, well, where do I want to hold that short to? So if price is here, this intersection would happen right at the monthly close in a couple days, right around the monthly close. And how aggressively would I want to take profits on that short? And how aggressively would I want to look for long setups for potential break of this trend line? Because people will be looking at this trend line. If they're not looking at it now, they'll be looking at it as we're rejecting from it and consolidating under it. So it should generate some liquidity and could generate a nice impulse. When it breaks. And you can, I mean, again, this is this is really speculative, but this is the kind of stuff I do to sort of form ideas. Is just sort of imagine over the coming week and a half what price action might look like, and you can surprisingly be pretty accurate. But what would be this is all very interesting. Okay, so you guys can tell me if this is interesting or not, or if this just seems like I'm doing a bunch of stuff that doesn't make sense. But so basically what I'm looking at here is if we did reject down into this retest of the range highs, and then we got a sharp impulse up into this key level. Let me just redraw some of these brush marks just to draw out this idea a little bit better. So say we do get a rejection off the POC and we get something like this, targeting up into here for a long. Well, that would mean that our future 618 retracement would align with this new low after this new high is made. And so it might make sense to target another test of that low. It's sort of like a predictive fib, if you've seen some of that in the Discord. Certainly would be very interesting to long another sweep of that level. Something like that. So a long here, short here, long back into this level. And just kind of imagining, you know, how price might interact with these key levels and still make it up here by the end of that first week in September. Something like that. Breaking that trend line. Could be interesting. But yeah, the general idea is almost thinking about just the future structure that would exist if these levels got tapped. Back testing this trend line, which these local trend lines have been something I've talked about in the Discord. They have been very well respected over the last few weeks. be interesting if this held. But the more times this level's tested, the more opportunities there is for a break and maybe a fake out of it as well. Yeah, so I think the most interesting idea for a long here is this kind of 26,800 region, 26,900. Now, of course, we could just see another impulse and continuation as well. Bit of local confluence here. So first we are reacting at our 618 golden pocket from this pivot, and now we are at the next one. But I mean, I like I like an idea like this. I think it would wreck a lot of people. Get some really interesting interactions with structure on a higher time frame. We could see something like this, come back down into this trend line, and then have that impulse break through this descending structure. Generate a lot of liquidity, target up into these highs, at the same time as ETH is targeting into these highs around the September 5th through 7th. I would say this, trying to predict, how price might approach certain levels, this can be very difficult. And so ultimately I'm just interested in the levels. But I think it's okay to imagine a little bit what it would look like if price did, say, interact with this very clean trend line, golden pocket. And this is the origin of a daily candle here, kind of the origin of an impulse. We'd come up and sweep these pivot highs as well. And what's great if ideas like this kind of play out, and price starts moving along these sort of level coordinates, so to speak, you sort of have your trading plan until it's invalidated for the next week or so. But rejecting from this POC is still a little speculative. I mean, we're just impulsing straight up here, so. Could still make sense to tap this level without a retracement. In which case, the retest of our range highs becomes a local golden pocket. Could still tap this level over the next 12 hours or so. Sweep this high, then come back down and retest the range. And something like that could make sense as well. the more volatile option would be to get a retracement before this, but I think that's pretty speculative. Which is why I might be interested in trying scalp longs off some of these local levels as well. Not expecting that deeper retracement. Watching some of this local structure. And the idea is you can trade multiple theses at the same time. You can have a local thesis. If it's not working, cut the trade. Maybe you get a TP1 off of it. What do you guys think? Do you find any of this interesting, or is it not making a lot of sense? Man, what a beautiful technical reaction on the DXY here on the daily chart. So much high time frame confluence. I've talked about this before. I won't kind of beat a dead horse here, but like back last year, I had this idea of the DXY coming into this parallel channel at this key fib. We front ran the fib a little bit, but perfect reaction off the channel at the same time as the ES grinded up into this level. And the correlation there, I think most of you understand it. And typically Bitcoin it's not like a one-to-one correlation with the DXY in the stock market, but it's relatively correlated. So you could form some high time frame thesis thinking, well, if we got something like this on the DXY and something like this on the ES, what would make sense for Bitcoin? And it's a similar process that I just used on this local time frame between ETH and Bitcoin. Like you think about those correlations maybe as to form some of your theses. But of course, yeah, Bitcoin completely misbehaved here. Well, not really. I mean, you could just say, well, this was the high, but it just seems so so clean to come up and take this high as the ES was grinding up here at this same time. So I didn't quite. And I can also just say that, you know, maybe there's a component where I had an idea a year ago and everything was looking so good, and maybe I kind of interpreted some of this local price action, just saying, well, I mean, I did close it though, but I did short the sweep of this high, but was still looking for that push up while we were in the range here, and then a sharper rejection, but we didn't get it. So, and you know, that can be something like I'll have to go back and reevaluate this probably over the next few weeks, where you have an idea for so long, like a high time frame idea, and everything's kind of almost perfectly aligned, give or take a couple percent. And it's hard to get off that idea when it's confluent with all these other things that you've had for a year. So, maybe it's just there certainly was a massive decorrelation between Bitcoin and the S&P. And I even like 8 months ago, I was expecting some decorrelation because there would have had to be for this to be a key level for Bitcoin. Well, this was a key idea for the S&P. We would have needed to see the S&P be stronger against Bitcoin, so I was expecting that to a degree. But anyways, I won't digress. Getting a little wick through this trend line. I would say, with the last few weeks being the exception, where these trend lines have been really clean, the typical modus operandum of these local trend lines are they work as liquidity grabs. Bitcoin usually doesn't like to just hold clean trend lines. It likes to generate liquidity instead of having a major rejection off of them, because people watch these. But we've seen so many very clean local trend lines holding the last few weeks, so it's been interesting. But typically I'd be looking for structures like this to form to generate a little bit of liquidity as people try to trade the breakouts rather than a clean rejection. Just being patient here. I see no reason. I'd rather just miss a long if we got an impulse here than trying to long in here. And if I miss the long, that's okay with me. Because what I do know, no matter what happens from here, as price builds more structure, we get impulses, we get retracements, clear structure starts developing. If you're patient, you're going to be able to trade nice levels, both short and long. I don't even really subscribe to the idea of missing a trade. Like if you have a clear level that you've been planning on trading, and you get it and you don't trade it for some reason, you could consider that missing a trade, I suppose. But if you don't have an idea for trading something and understanding that the market is random to a large degree, there's high probability events that happen, but at any given moment the market could go up or down. So if you're not trading around those higher probability levels and ideas, yes, you could enter a long, you could enter a short, and anything could happen. But it's not missing a trade if the only way to get into it would have just been to try to guess which direction price is going to go and have no technical idea. But if you're a breakout trader, I'm sure there's lots of people looking at this as a scalp and saying, well, I'm going to long the break of this trend line. And so that could be a technical idea. I'm just not typically a breakout trader. It's already been run through a few times. Another thing that, and this would be for more for members specifically in terms of, sometimes I'll be taking scalps, sometimes I'll be taking swings, sort of understanding the time framing of those trades. It can be helpful if you're on an exchange that allows it to open sub accounts, separate accounts that allow you to take completely separate setups and separate your scalping trading account from your swing trading account. And it just helps compartmentalize those ideas in your head, or you might have a swing long idea. Like for example, I think I think when we were sweeping this low down here, my tweet was, or my Discord message was something like, "There's no way in hell I'm not longing reclaim of this level." But so I want to hold that long. I got a nice long near the lows here, but also in this time I'm taking new longs, new shorts, new longs, and so it can make sense to say, well, I've taken some profits off this long. I'm just going to hold that long, and I'll trade everything else separately on separate time frames. I don't have a reason, just because I'm gonna short this move into this low to close this long. This is all local. I think it's somewhat likely that we come and test these highs at this point, but we'll see. Price is sort of grinding up through this level. What would make it less likely is if we just reject back like this. And of course we could just have another impulse. But some local bearish absorption still persists. Could get invalidated very quickly. A lot of Rodney's asking which exchanges let you take separate multiple positions on Bitcoin. Most exchanges, if you're trading the same pairing on the same account, is just going to average your position in, which technically doesn't change anything, but it can be, it depends how you trade, of course, but even psychologically, averaging your entries can be tough. So exchanges like BitGet and Bybit that I've used, I really like Bybit. I'm working on getting a different identification, but I can't trade on it currently. But they offer sub accounts, so you can have your main account and then you can put funds in a sub account and everything's separated. We do have still bearish absorption here. Or you can just trade on different pairings on the same account. Both work. But yeah, and it also, like, let's say that you've been doing more higher time frame trading and you want to try some lower time frame day trading stuff, and you've maybe been back testing and you like your results with paper trading or something like that, or trading with like a couple dollars or whatever you're doing to test it, then you can say, well, I'm going to have a scalp account here that the funds are separated. I'm going to trade the risk relative to that account, and I'm going to test my live performance with this scalping account versus, and so anyways, it can be nice to separate the accounts, to separate mentally the time frames of your trades, so you can still trade your higher time frame stuff separately, and if you're interested in a scalp, you just use that sub account. Because psychologically, I think a lot of people find it hard. Let's say that they have a long. Most exchanges allow you to do hedging, so you can have a short and a long at the same time. But let's just say you have a long from much lower. Psychologically, people can find it hard to say, well, why would I hold that long if I'm taking a short here? But there's a big difference between taking a short off low time frame structure here and closing a long from much lower. Like the whole time frame of those ideas is completely different. But people can find it kind of, I think, mentally tough to have a long but be opening a short and not closing their long, especially when they see those two positions open next to each other. But it does make a lot of sense to separate the time frames of your trades. Give me like 2 minutes and I'll be right back. I'm gonna grab a coffee. All right. So again, we are still seeing some bearish absorption forming, these local highs. Yeah, I'll start doing some macro analysis on next Monday. Maybe I'll share some in the Discord before then and then share it on Twitter on Monday. On different assets. Again, it's just kind of a bad place to be for some of these longs at the top of the range. Price can obviously break out, but 1.1 million. So this is showing, for those that don't know, the white and the blue here are the candles. So the wicks, this is the 5-minute time frame. And then on either side of the candle is the market buying and market selling. So you see at these top of the candles, like 1.1 million long, 0 selling. Here, 1 million long, an increase in open interest here this time. Some longs closing in this candle as well. But anyways, we're seeing some longs coming on this breakout of this local trend line. And price can certainly break out. I mean, we're only talking several $1 million of absorption here. But you're seeing that buying interest coming in here. So it's a potential trap for breakout longers locally. And because we're seeing the aggressive buying interest coming in, but we're seeing some of this absorption. So there's also, so we know there's market longers, that moves price. We have some limit sellers here selling into this market longing. And if they weren't there, then price should be moving up here with these aggressive market longs. And I would imagine some of that interest comes from, we have a horizontal local break here, a little bit of a local uptrend. We have a diagonal break. So this is going to be interesting for people, given this, to try longing for another leg up. And we certainly could get one. I don't, maybe I wasn't showing that on EXO. Was I showing this on EXO? I forget if I tabbed over. Anyways, I was showing 1.1 million, 1.1 million. So we see the market longing coming in. People obviously wanting to long that breakout. Bearish divergences. Setting themselves up to get kind of wrecked here locally. And so now we're seeing a lot of those longs start closing on this rejection. 1.4 million, 970K, 3 million negative delta forming in this 5-minute candle that just opened. And so you can kind of understand, again, just the nature of what's happening here. People are longing into this local breakout, price rejects, and then they're all stopping out. Yeah, there's a lot of similarities between this and this, which I'm sure is not going unnoticed by the market. But forming a pretty clean little range here. Getting some nice structure. So I'd say we're seeing one of our bigger sell-offs here. We had a decent one here with 6.8 million negative delta in a 5-minute candle before this impulse. These can be telling as well. You know, do we bounce off of this? Is there enough limit buying here to hold price up? Because this candle is predominantly selling. Right into a 1-hour candle open here. We're at 5.4 million negative delta. A mix of shorts opening and longs closing. You can kind of see open interest wicking up here as well. So there's some shorts opening. Negative 2.2 million negative delta market selling right at the bottom of this candle so far. So either price breaks down these this limit buying, or it doesn't. But there certainly is some limit buying here. Because this is a $10 tick in price, so somebody absorbed $2.2 million of market selling. and getting a little bit of a wick there. 6 million negative delta. And it is right at the 618 on the 1 minute time frame. So it's just interesting to see how much selling and volume kind of peaks around these little fibs, just locally even. Rodney's asking, how many hours do you spend staring at the live charts? I assume you mean daily. Not that many hours. Like, I have put in countless hours. Typically, I'm looking at live, low time frame price action at key levels, low time frame order flow at key levels, regularly. When there's lots of volatility, big moves. If I'm scalping, which I don't do as much of as I used to, but I do some of, you might be scalping an entire session. That could be 6 to 8 hours or whatever it is, depending on the price action. And you're spending a lot of time looking at low time frame live charts. But it needs to be productive work. So, I think a lot of times, like if someone opens a position and then they're just going to sit there and stare at the charts with for no reason, they're just watching green candles, red candles, green candles, red candles, and then maybe trying to make decisions. I'm going to close, I'm going to open. I don't necessarily think that's productive, because your emotions start taking over, especially like if you're trading a higher time frame idea. For most people, it's better just to trade your setup, have your invalidation, and not stare at the live charts. But the benefit is of like testing low time frame price action or looking at low time frame order flow is you can really start to understand what's moving the market. Like, is getting a bounce here that surprising given the big negative delta selling we saw here at the bottom and price holding up? Like, you can make sense of it. And for the same reason, so you have like a 1.4 million, 470K, 464K, 2.2 million right at the bottom here. 6 million negative delta, that's significant in this local range. Shorts opening, some longs closing, and then price wicks back up, and now you have 1 million. So now, okay, I'll just kind of explain this a little bit. So now you have the inverse of what we had at the highs. You have longs opening at the highs, increase in open interest, you see the longs opening, price retraces, those longs get stopped out. And this is why I was saying, like, this structure can just chop a lot of people up, especially after a big move. Lots of people wanting to trade it aggressively, but you're going to just continually see longs opening at the highs, 1.1 million, that's what I was pointing out earlier. And then all those longs get stopped out, shorts start opening. Now we get a squeeze up on a decrease in open interest. So this means now all these shorts are getting squeezed out. 1.5 million buying, but a lot of this is going to be shorts covering. There's longs opening as well, but shorts covering, and people are just getting chopped up. Longing the highs of the local range, closing, shorting the bottom, closing the shorts, and it adds up pretty quickly when you're trading that way. And we could kind of infer that there's a possibility of a bounce here when you see the little wick up here on this 2.2 million negative delta. absorbed right at this level. That's a lot of selling right in, you know, a $10 tick in price to be absorbed. Now we've come and taken this candle high, and we see a lot of those shorts stopping out. And it might make sense, some of these shorts, given the wick just taking the top of this 5-minute candle. Thought, well, I'm going to short here, and if we break back up above this candle, I'm going to close. So yeah, and you can really see the emotion of people's positions in order flow here. Shorting the breakdown, closing out, and now we're seeing an increase in open interest. So we had shorts closing here, but now we have longs starting to open as well at the top of this wick. So people don't want to long down here, they want to long up here. And then if this happens, all those longs stop back out, maybe shorts open back up. And this is why price can just chop around, because the market's just abusing these traders. That's something to watch too, like if you're using order flow for scalping confluence and you're scalping a local range, you know, scalping around these big imbalances of market selling at the highs of the candles, or market buying rather, and scalping longs at the market high imbalances of market selling. See a bit of a reaction, scalping around that. But you know, if you're trading like that, you've got to be ready to cut, obviously, relatively quickly. And the range needs to be sufficient. Yeah, so some of these are traders. Someone's asking if these are traders with tight stop losses. You can kind of infer that, simply because, so like here, for example, you just get rid of open interest. You get the same kind of information from open interest, but I'll just go to net shorts. So we see this increase in net shorts on this candle, and then an impulse up. And originally this candle was forming with a decrease in open interest. So if CVD is going up, that's cumulative volume delta. As open interest goes down, that means that's positions closing. So you know those are shorts closing predominantly in that candle. Sometimes CVD is flat, which means it would be like a mix of longs and shorts. So we see this decrease in net shorts on this 3.8 million positive delta candle. So yeah, we can infer that these are tight stop shorts opening, closing, with also the inverse happening for longs. Longs closing on this wick down, net longs increasing on the move up. And so what you can infer from all of this is that literally everyone is getting wrecked here. The shorts are getting wrecked, the longs are getting wrecked. You know, on this move up here, you see the net shorts stopping out, reopening, stopping out, and we can see the inverse net longs increasing on these candles, net longs decreasing. Again, you can infer the same information just from open interest, but yeah, people are getting chopped up. And these aren't, you know, given the type of, like these moves, like this is 0.8%, 0.3%. Like if I'm going to trade a range like this, you know, say I'm going to short like a POC or the top of the range, I kind of want to trade it like once, or if I'm going to trade it again, I would like to have taken profits on my short, and if we get a retest, I can then add again. But like trading these 5-minute candles, short, long, getting chopped up like this on 0.3, 0.4% moves. And you can imagine a lot of these people are I would imagine trading, let's just say they're trading on enough leverage to make this 2-3% risk or more. They're just getting absolutely wrecked by fees and by these 0.3% moves. Like if they're trading, this isn't how you should structure your risk management, by the way, but if they're trading their whole account on 10x leverage, a 0.3% move is pretty substantial. Getting stopped out. It's a 3% loss. And there's going to be people doing that. And again, this is me speculating. But if people are stopping out, opening their trades and stopping out their trades on these little local moves, which we know they are, that exhibits some form of emotion, right? Like if you've opened multi-million-dollar shorts here or $1 million short, and you're stopping it out on the wick high of this 1 minute candle, to me that exhibits you're kind of stressed and emotional about your position. You're trading it very tight. That's not always the case, which probably infers some high risk in those positions. Being unable to hold, even just for a reaction here. And what makes matters worse is it's probably some of the same traders that are longing at the highs of the candles or then shorting at the lows of the candles. It's sort of the same decision-making process, shorting the lows, longing the highs. And so they're probably similar traders, or the same traders, some of them. And the reason that you can also kind of infer they're the same traders and not new traders coming in and opening up or closing positions not opened relative to this price action is the sizing is all sort of similar. So you have like these 1.1 million, 329K. You obviously have some longs accumulating here, 1.1 million, 420K. And then when price comes down, it's relatively the same accumulative volume here, or cumulative delta. So the same size that kind of opens down here, closes down here, is relatively similar to the size opening back up here or closing here. So again, you can infer that these are the same positions, opening and closing. Yeah, and it's just not ever something you'd want to do. Like if you have a short idea here, I think your invalidation, like you can maybe get away with trading this range twice, taking 2 losses maximum, which would be shorting these bearish divergences forming here at the POC, and then with a stop above the highs, and then maybe if this happens, you get a rejection, you could justify trying one more short. But what you don't want to do is be chopped up shorting and longing here and take 8 losing trades in a 0.5% or 0.8% range, which it looks like that's happening to a lot of people here. But we do kind of have this trend line break, deviating around it, retest. So I'm assuming there's going to be some, volatility still around here. Still a lot of potential to wreck some longs here. Look at this the net longs, net shorts here. Like we can see compared to these ranges, like certainly some volatility on some of these bigger retracements. but pretty flat. But then after this impulse, just a lot of people trading into this, opening longs into this candle, all stopping out, opening longs, stopping out, opening longs, stopping out. Actually be interesting just to do some the origin of some of this volume here. I mean, yeah, like from an order flow perspective, you would expect to see quite a bit of volume, quite a few longs stopped out taking these lows. That could be an interesting scalp idea. I'm not saying we're gonna break down here, but this rounded grinding structure that's starting to form can be quite bear structure. Of course, if we break this trend line, then sort of invalidates. But you'll find some of this like form before impulse down a lot of times, and sometimes it leads to a pretty big impulse. This will happen on multiple time frames. But yeah, so I'd say like the benefit of doing low time frame order flow analysis is understanding what's happening. So like you understand how traders are positioning themselves. This is why this can be useful. Is you can start to see, oh, these types of traders get wrecked over and over and over again. Sometimes, obviously, ideas work for them, but you'll see them getting chopped up. And so you can start to look at counter trading some of that, right? Where instead of shorting at the lows, you're more confident to short in the highs because you've seen this play out over and over. You've seen these local bearish divergences form, showing that longs are getting absorbed. And it can just give you a little bit more understanding of why you might want to try shorts at resistance with tight invalidation or longs at support. But anyways, we're seeing now the inverse happen again. So people selling and shorting into this move, shorts getting stopped out, and then longs start opening up at the top here. We see them on the green side here, 1,556,000, 1.6 million. Some of these are shorts stopping out. And now a big decrease in open interest as they are getting stopped out again. 1 million, 1 million. So yeah, these traders are being annihilated on this low time frame. And ultimately nothing's really happening, and they're just finding themselves on the complete wrong side of price over and over and over again. And I'm not saying there's anything wrong with taking a losing trade. I mean I took a losing trade today. But it's just this is very emotional trading. You can just see it in the order flow here. And now it's going to be interesting to see if this local low holds again. Another you'd expect it to break at some point, but another 2 million negative delta, 1.1 million negative delta. Longs getting stopped out, some shorts opening back into this support level. But so now we're also seeing if we bounce here again, it's just worth noting at this same region of price, 1.4 million, 2.2 million, 1.1 million, 2 million, there's some decent long exposure somebody's taking, limit absorbing all of this. And yes, they could have offloaded some of it up here with their limit selling, But as more and more selling gets absorbed, that position is getting bigger and bigger and bigger, and it's going to take more liquidity to the upside for them to offload. So if this trader, if they're not big enough to hold up price, they could also get wrecked by a breakdown in price, and you could see a bigger sell-off if they're able to hold up the market here as they keep absorbing. They could squeeze price higher to offload this position they're building. But lots of selling just coming right back into this level again. So again, I would just say that although I anticipate as order flow develops here, lower is looking somewhat likely at some point, you still have to give credence to some of this absorption we're seeing. Price wicking back up against this 2 million negative delta, 2.2 million. So there's two scenarios here in my view that could make sense. One is that who's ever building this long position, they haven't demonstrated they're a massive trader yet. I mean, they've absorbed, and it could be a couple traders, a few $1 million in selling pressure, maybe 4 or 5 million. And so they either could get wrecked or squeeze price up through the highs again to offload those positions. It doesn't. So someone's asking, when you say traders is absorbing the shorts, are you talking about institutions? We don't really know the identity, right? I mean, the more volume that gets absorbed, the bigger you could infer the entities are. But I mean, there's plenty of traders, just typical traders, that are capable of absorbing a few $1 million in selling pressure. And this is a little bit of a suspect place. Like, I don't know. Personally, and you can call me a chicken, I wouldn't want to be opening a $5 million long position here. Unless I knew I could hold the market and push price up. You know, you take the, like, it could be a big trader or an institution that's capable of filling $100 million position, but they can only fill what there is, right? You can't open $100 million long here. So you just sit there and absorb the selling pressure with that plan of pushing price up once the selling subsides. But it could also be a smaller trader. But because I don't have the ability and the confidence here to say, like, oh, I'm gonna build a $5 million long position here, and then after all the selling subsides, I'm gonna drive price higher. I'd rather wait for some more clear signs that there's big traders coming in to have the confidence to build something like a continuation or a swing trade off of a move like this. And of course, the additional idea here is we have a big move, some bearish divergences at the highs. It just seems a little suspect to be building a big long position, but it should just be noted that there's absorption here of some heavy selling into this level. So could be a big trader sitting here waiting to push price higher. Just the way this, someone's asking, the CBD line's changing position here. It's changing relative to itself, but basically it's overlaid to be relative to the candle bars it's on. It's just the way it's done here on EXO. Like if you put on the setting to overlay it. But you'll notice it's still making a lower low here Still making a lower low, lower low. It's just it scales a little differently with price depending on how you're zoomed in or out. I just like having it over the chart. You can have it completely separate as well and just measure everything, or even eyeball it. But yeah, so this is considered a local little bullish divergence forming here. But so like, what would wreck this? Say this is a trader who's opening a big position, building a long position here with limit orders. Um, a bigger trader comes in and market sells through this level and starts at cascade, and then this trader's forced out. So that's how that divergence could break. Just important to note that we're seeing signs of these traders getting wrecked, but eventually this range will break, and just because somebody's capable of opening a $5 million position doesn't mean they control the market. But my guess is that we'll see some ranging here continue. Yeah, I'm seeing a nice little bounce here. So let's just let's change the conversation a little bit here. Not to talk about what is likely to happen or probable to happen, but just talk about what we're actually seeing. So as this structure forms and we get some of this order flow information, it's becoming quite clear that there's a trader here, or multiple traders. There's limit longs here. And we've seen this level tested twice on a high negative delta. So regardless of what comes next, we need to accept the reality that there's limit longs coming in here. And we can clearly identify this trader. So to me, this would be, like, I would be, not to say confident necessarily on where price goes next from here, although locally higher seems likely. But confident that there's a trader here, and that's very easy to infer because you see repeated market selling into this level and price not breaking down. Someone has to be sitting here with limit orders absorbing that market selling, or price would break down. And it's the same thing you can infer up at the highs when you see the market buying coming in and price isn't breaking out. There's a limit seller here. Could be the same trader creating this range, using people as liquidity. But personally, the most aggressive long I'd be interested in would maybe be coming and sweeping this as a scalp. But looking down here as well. So still seeing some selling here. So this could be interesting. We could see, how this trader reacts, or this group of traders reacts to if price starts breaking down here. Do they start selling off their position? Or do we not see that cascade in selling? Could give us some indications on how big that trader is. As we're even starting to form some bullish divergences between these lows. Now we're seeing an increase in open interest here. You see increase or open interest kind of spiked up here. So we're seeing some shorts here. 500,000, 410K, 413K. So this is something you'll commonly see on all time frames pretty much in ranges, is you're going to see the most aggressive selling coming in at the lows, the most aggressive buying coming in at the highs, which is why price likes to range and why breakout traders tend to get wrecked, or breakdown traders. Obviously, sometimes price does break down. I mean, in theory, if enough market selling comes in at a level or enough market buying, the level's going to break. But on big moves like this one, for example, you'll rarely see them initiate as a huge increase in open interest. Sometimes you will, but oftentimes it's like this. It's just shorts getting wrecked and stopped out. So you'll see shorts closing the entire way up. So even saying here, like, oh, well, the breakout traders did really well on this breakout. Well, the vast majority of this is just shorts getting stopped out. It's not even people longing into this breakout. So you're more seeing the breakout longs, like the big increases in open interest here. These potential breakout longs getting wrecked and closing their positions before the breakout. Here again, the big actually, this was a lot of shorts squeezing out. This was a lot of longs opening. People longing for potential breakout, closing all their positions, getting wrecked. And by the time the breakout comes, there's not as many people longing it. I'm sure there are some, but it's predominantly just shorts getting squeezed out. So what's interesting, I think, about order flow analysis, like just watching it and understanding the market, is you'll start to understand that as big moves down happen on decreases in open interest and longs getting stopped out, and big moves up happen on decreases in open interest with shorts getting stopped out, and local chop, same thing. You'll start to understand that, I mean, and it's just, you can infer it as almost a certainty by just looking at the nature of these positions opening and closing. Almost no one is ever on the right side of price. Like, you do wonder, and obviously you see, like, there's a lot less volume in the market these days, but how people survive for very long in this market. Like, we know 90% of people lose money in the market, and that's reflected in order flow, and it should be. I mean, you should expect to just see pretty much every move being people losing. Increase in open interest, longs opening, all getting stopped out. Increase in open interest to the downside, we start seeing that. Shorts opening, longs getting stopped out, all the shorts getting stopped out, back and forth, back and forth, back and forth on all time frames. So you'll start to understand that order flow is just showing you a series of people getting wrecked. Personally, I'm not interested in longing this. We do have some bullish divergences forming, but I'm just going to wait for lower, whether it comes or not. See if we get that quick wick down through these levels. They're very local bullish divergences, by the way. Nothing crazy. Still kind of interested to see what happens with this trader, because they've absorbed, there's a lot of selling that's been absorbed here. It's accumulating. So they're certainly working to hold price up. This is predominantly shorts opening, increase in open interest. So that can generate, if price starts pushing up, that's probably going to generate a little short squeeze. This would be a very advanced idea, but like if you wanted to think about like what could be happening here, let's just say that like this is a bigger trader absorbing the selling pressure, but another bigger trader is planning on wrecking them. And that trader could just be the market, aggressive selling coming in from just all retail and everybody accumulated. But let's just say it was a battle between, just to sort of create the hypothetical situation and make it a little more clear. It's a battle happening between two big traders. And this trader assumes he's holding up price against retail traders. And this trader's identified somebody wanting to limit long here. Well, they start market selling into this level and don't over sell into it. They let this trader keep filling their long position. So we see selling, kind of decreasing into this level a little bit, higher selling. This trader's maybe building up their position, adding to their limit long, holding up price, and we see selling tapering off here until this trader's sort of tapped out and they're fully long, and then a bigger trader steps in and nukes that position because they can't hold it up anymore. And that can also just be, there's like Wyckoff theory, the idea is like the composite man. It could also just be that's sort of naturally what's happening just in the market as a whole. A bigger trader stepping in, they can only absorb so much selling. The market as a whole is selling into that level and eventually breaks it down. So I think it's not necessarily important to try to necessarily identify who is this trader. Is it an institution? Is it just somebody with decent size? Who's selling into it? But more just interpret what's happening and understand that, okay, well, there's a big long position here. If price breaks down, there's going to be pressure put on who's ever building along. If they're holding price up substantially here, they've demonstrated they're a big trader, and they could, and I think so far they're demonstrating they're a pretty decently sized trader. And they may have the ability to squeeze price up. Nice little swing failure here. Like this is very clean technical local price action. Order flow is very confluent with the idea of a squeeze up here. We'll just look here. Right at our local 618, this little local range, this is the 1 minute chart, but you can see we just come and retest these lows, sweep this low, heavy market selling into all these lows, getting absorbed. It is quite nice. I have a feeling this guy is going to get paid off for building the position. And so if you're trying to position yourself with big traders, the idea here would just be, like if I didn't long this, but if you were to have longed it, you'd say, well, I've identified a bigger trader here absorbing some selling pressure. I'm going to cast my lot in with them. You could either be helping them push price in the direction they're trying to trade towards, just tagging along if you have smaller size, and say, I'm going to trade with this guy who's building this position, so I'm going to try longing with him. And if we'll get wrecked together. And same thing, you see the absorption, someone's selling, say, they've built a pretty big position, I'm going to try trading with them. You have some technical confluence. And we can just see here at this level again, red, the blue and the white are my version of red and green candles, and the profile here showing the market selling and market buying. So this candle almost all market selling, peaking at the bottom. This candle almost all market buying, market selling, market selling, market selling, predominantly market selling, nothing major, predominantly market selling, a lot at the lows again, almost all market selling. Both of these two candles primarily shorts opening. So this trader now is building a long position with shorts open locally on the other side of him. So he could, if he wants to squeeze price up, he could say, well, there's shorts stacked here. If I can start squeezing price up, trigger some buying, trigger those shorts to close, I have exit liquidity for my long position. Because these traders having to close their shorts gives him exit liquidity to get out of his long. And every once in a while, it's not super common, like this would be a little demonstration, you really get the sense of the size of the trader, because this is pretty rare, but sometimes you'll have like suddenly out of nowhere $10 million market buy or market sell come in and price won't move an inch or a dollar, and it will cause a massive divergence, and that can be a sign that that trader is quite large. So they absorb that order. And so it becomes a lot more interesting. Like, let's just say, for example, this is an extreme example, but $20 million of market selling just came in here, a market short, and price didn't move at all. Well, then I would very much look to position myself with the trader that just absorbed that selling pressure. It'd be a lot more interesting, because you could probably have quite tight invalidation, and the probability of the trade goes up a lot higher. You can cut it if price starts moving against you, but see some of that in here. It's not that crazy, but you see these big spikes in CVD. This time frame is going to be a little hard. This was an example of buying pressure coming in here. So we take these highs. There's a really extreme example back here. Yeah, I think this is it. Where you see just massive longs start opening here into this move. This is signs there is big absorption happening and a big sell-off. So a few of those on the way down. Someone asking, they see a short set up around 28,500. What are my thoughts? I went over my thoughts earlier. There's a level up around there I'm watching. Let's get rid of some of this. Oops. But if you go earlier in the live stream, I kind of went over all these ideas up here. All right, this level's breaking down. So we may see some signs that this trader's starting to close off his position he's building. Oh, I wasn't even on TradingView there. Sorry. So we see a lot of market selling coming in right at the bottom again. Price wicking back up, 1,788K. So again, there's still a trader here taking the other side of this move. But positions closing. I would like to see price come lower. They're there, here. but we have signs of a trader here still. Another confluence here is in 10 minutes we have a new 4-hour candle opening. Kind of opening, looking for positions right into that open. The first 15 minutes can be kind of interesting. So again, I'd say we're seeing signs that this, whoever this trader was that was building a position. It's hard to say for sure if this is still some longs from up here closing, but there are some signs they're starting to close out this position. There's a lot of negative delta coming in here, 4.7 million negative delta as we take the lows. But if we reclaim them, still some significant local limit buying coming in here. But it's important to note that there's big traders that trade with limit orders, and they're they can make emotional decisions too. So, you know, presuming something like this happens again, they want to long into this range. Could be accumulative. Some medium-sized traders longing, they can get wrecked too. Some shorts opening now. I am preparing to potentially look for some longs off this retracement. Some scalp longs. I really don't love waiting for the deeper move down is just always the ideal. Just don't always get it. So we'll see what kind of volume comes in here. There's this move. Taking these lows could be interesting. Not a lot of confluence here. Just a fib. There's a lot of longs that open on the way up here. Taking these lows would be most interesting. But then we just have our retest of the range here, which would be the most interesting level. So ideally, price just nukes through all of these levels. And it doesn't even give you a signal to try along. And expecting to see some nice volume coming in if we start breaking down here. We already have some nice volume. See a big decrease in CBD. Initially shorts get along stopping out, but now some shorts opening. And you know, when you see heavy shorts opening like this and price start wicking back up, you know, even though I'm looking for lower and I am short up here, I went short here. I went short the breakdown personally. It's just too suspect. I don't want to be with the traders selling and shorting here at the local lows. I want to be selling and shorting at the local highs where my invalidation's clearer, tighter. So I wouldn't personally be adding, but we do have a big, we see this big decrease in CBD, more and more market shorting coming in, increase in open interest, decrease in CBD, or negative delta here, 4.1 million. So just heavy shorting coming in here, potentially a bullish divergence forming here. I mean, this makes me a lot less, this almost makes me want to close my short, frankly. But I won't. I have nice invalidation up here. We could see a lot of these shorts get squeezed out just locally. My risk is quite small on the short, 0.5%, taking these highs. But yeah, this is very, very extreme selling, and price isn't moving and it's bouncing. So, that's something to note. Although this kind of structure here and the rejection certainly is looking more bearish. Just the context that, well, there's lots of market shorting coming in here, so it's just not where I'd want to open a short. I would imagine that taking these lows at least would be somewhat likely. A new 4-hour candle in 6 minutes. Yes, we have some market selling coming in here, but I think that's getting absorbed. But even if this is a bigger trader absorbing this, they might just absorb and build a position this whole move down. They might not necessarily care if price puts them underwater a little bit. And the question really is anyone shorting here likely to get out in profits if this happens? They're probably targeting much lower. And so the liquidity that they're going to generate if we do squeeze up is probably still going to be intact if something like this happens. So potentially just more liquidity can build over the next 5 minutes or so and push us into these lows. But see, this is where like the emotions of watching live price action can, take over. Like you're in a short, you see a large bullish divergence forming some heavy selling. You think, maybe I just close my short in a little bit of profit here. But for me, I'd still want to wait for technical reactions. I kind of have a scalp long idea where I could hedge my short a little bit. Just wait for that. So what typically is a better kind of format, in my opinion, is you set alerts around your key levels if you're interested in trading them. And maybe you're doing something else, but you're not watching live price action to make trading decisions necessarily. But if you're watching live order flow, you could be building a context here, so you kind of understand. At a glance, I can kind of understand already what's happening. Like I don't need to be watching it. I could come and just look at this and infer what's happening here. But if your key level's being tapped, and you have this huge, like maybe we get a massive bullish divergence here, which it looks like we may, then you think, okay, well this little local long looks pretty good, so I'm going to take it based on order flow. You just come check in as your alerts are approaching. So this is a very interesting scalp long setup, I'll say, because you imagine there's going to be a lot of selling taking these lows, and this divergence could get quite large. This little suspect, something like this, like a very quick wick, could be a little challenging to trade. But for me, it's just, again, risking a reasonable amount of money. If it's 1% of my trading account, 1% of my scalping account, with proper invalidation, as long as I have what I feel is a reasonable thesis for the trade, you just decide when and where you want to put on risk. That new 4-hour candle opening in 1 minute. And the reason I'm talking about this is there's a few times of the day that are very high probability pivot lows and pivot highs. One of those is around the New York Open. One of those is this second 4-hour candle after the New York Open. Around the daily close can be a nice time. It's like the Asian Open. But we'll see how price reacts here. If we get a nice reaction for a scalp long idea, I wouldn't mind seeing lower. I wouldn't mind seeing a bigger breakdown, but it's looking like we're gonna potentially set up for a reaction off these local lows, and I'd be willing to scalp it. I mean, the worst case scenario on longing retracements into local support is if you have 3 ideas here, 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 or 4 ideas, and none of them work. So you get stopped out. Maybe you get some consolidation and you try another one and get stopped out. Maybe you have these impulse lows. You take it and you get stopped out. And then you try this one and you get stopped out. So you take 4 trades that all lose. In my case, I have a short from the high. So if that happened, that would, short targeting down to here, that would cover some of the losses to where I might get out of the whole idea break even. Ideally, what happens is you don't do that. And you only trade the local setups if they're higher probability. And maybe you get the TP1 out of them. And if you're trading good levels, typically you don't find yourself in the worst case scenarios very often, where you can't even get a TP1 out of your positions. You want me to look at the divergence between this? Are you looking at which exchange is spot? Coinbase is spot CBD? It's Pwnstar. Or did you post it in the Discord? Aggregate spot CBD. I see Gerard posted it there. We're seeing spot CBD increasing. I don't like I don't mind looking at Coinbase. I don't love looking at the aggregate. I don't like Binance data in anything I'm looking at order flow wise. Just don't particularly trust it. I know lots of people use Binance data, and I don't necessarily want to, if people want to use it and they find that they get an edge from it and they trust that data, then that's fine. I mean, I'm just not ever going to use it. aggregate spot showing a lot of buying pressure coming in here. Yeah, so for me, still just being patient. It's interesting to note what's happening here, but again, this isn't something I'd trade personally. You technically could have, tried along here with these local bullish divergences and say, if we break down, we're kind of retesting this level as resistance, just cut the trade with tight invalidation. But I have so many levels below that I think are likely to come, and if they don't come here, we're likely to get some of these deeper retracements later. So I'd rather just trade around some of the higher time frame ideas. And of course, taking these lows isn't particularly high time frame, but structurally, I mean, it's the most aggressive long I'd be willing to consider here. And order flow seems to be conducive to the idea, in my view. So the best case scenario for me, if this level's not going to hold, like the worst case, and what I mean by worst case is it puts me into a long, but it's not but I get stopped out, is to get like a minor reaction here, which is not uncommon even if we break down, and then price does this and then nukes the level. The best case scenario, if the trade's not going to work, is just the level gets broken and there's no reaction and there's no long trigger. And then I just look to the next levels. Of course, the preferred scenario would be you take the long trigger and you get the impulse up and you get profits off the long. And those profits, because the short position is such low, it's a smaller size with low risk, the profits off of a long that looks like this let's just be reasonable about where your entry is going to be off a market order versus your invalidation. Like, you're probably not going to catch the exact wick. Say you catch this, but let's just call it a 3R trade. Probably even take 2R off of it. If you trade it perfectly, could probably get something like this, but let's just be reasonable about how the average person is going to trade a scalp like this. I will note, I would consider this local grinding down sort of bearish structure here on the 5 minute. And it's always something to watch, because you can also, when you have this kind of local grinding structure, you can also use a break of that structure in some cases as a long trigger. This one, it's set up, depends how we get there, but like if it was something like this, it'd be completely reasonable to wait for a break of the downtrend, and you could probably trade that with tighter invalidation. If the move happens like this, well, then your setup gets a little weird. If you're using the descending structure as a trigger, and it's something like, a 2R. So when using like a break of a local descending structure like this as a trigger, the ideal scenario is that price taps the key level and gets a reaction as close to that structure as possible. And you can use that as a tighter invalidation setup. Still certainly some bullish absorption here locally. Closing, we're about 10 minutes into the new 4-hour candle with bullish absorption, by the way. We haven't swept either of these minor lows, but look at all this market selling and shorting coming in here. So wouldn't be surprised to also just see us front run the lows either, given order flow. Would I consider a long for something like this? It's not my ideal setup. The reason I don't like trading all these like local ideas like this long and this long is because you're basically putting yourself in a position where you're going to keep longing all these local levels before any of these key support ideas are tapped. And so you could put yourself in a position where some of these ideas don't work. So not only are you going to take maybe one loss or two losses on longs, potentially if those ideas don't work, on the way down you've suddenly taken 4 losses off trading minor ideas. But from an order flow perspective, breaks of this structure start looking interesting, but personally I'm fine just to wait for lower, maybe into this next 15-minute candle. I'll be right back. All right. I will note too, I had mentioned in the Discord earlier that I was interested in a short sweeping this high, which I took, and I took a loss there. I was interested in the most aggressive long being sweeping this low. Similar setup to here, but we front ran into the 1 minute golden pocket. All right. So what I'm going to do for this live stream is I want to wait out the opening of this 15-minute candle. I'm starting to get the sense that this low might not be coming. We're seeing this immediately anyways. We're seeing this consolidation here, chopping around, heavy shorting and selling coming into here. It would not be surprising to me to see something like this or take this high. And that would put this long into play closer to the daily close. I have no intention in sitting on a live stream until then. Trading a sweep of this low is very interesting to me into this first 15-30 minutes of this 4-hour candle. So I'll stick around for that, but I'm not thinking it's particularly likely to happen at this point, given order flow. If we start breaking, we have two local structures here, this consolidation and this local descending structure. Another squeeze up, front running the lows could start to make sense. Again, like this could be a long setup. Would be a type of thing that I have certainly scalped. But that'd be something more I would consider on an exchange like Rollbit, where I can actually just get out with no fees, get in and get out with no fees, because it's such a small move here. Can even just get out at like a fraction of a loss with no fees if much earlier. The reason you kind of need to use a bit of a wider invalidation if you're trading something like this on a typical exchange is because you can't afford to be stopping out your trades like this because of fees. Where on something like Rollbit, you can close, reopen, it doesn't really matter. But I'm more interested in just trading my key ideas here. Putting in a little swing failure in the 15-minute open, that's sort of a nice little local pivot, but we can see price starting to kind of grind up here. And so, yeah, from an order flow perspective, I'll just review that really quickly. The reason it's getting maybe a little less likely that we see these lows swept now is just this heavy selling that came in here. We're consolidating. We're starting to grind back up. See $4 million in market shorts right at the lows. You could infer that the market would like to punish those traders shorting right here. What you would have ideally liked to see is those shorts come in at a break at these lows, which still could happen, but yeah, so the reason I'd like to stay live here is I'd like to kind of navigate my thoughts on price action if we take these lows for a setup I would take. And it still could be imminent, and it was looking much more imminent before some of this consolidation and shorts got absorbed. But we'll see. The timing of taking the lows still looks kind of nice. But the order flow and even local structure here starts to look okay for a move up. So we're kind of grinding and moving up into this descending structure. Nothing here. Seems very just trying to get an idea if we did come down and take these this level. Is there a parallel structure here? The interaction would come in about 15 minutes. That'd be kind of sweet. All right, we'll stick around for the next 15 minutes here. See if we get something like this. That would be kind of cool. Come take these highs. You can imagine that a lot of these shorts are going to get stopped out if something like this happens. Turath. No, I'm not really paying attention to EMAs here. Yeah, so the reason I'm going to stick around for this would be an interesting scalp short, especially if all these shorts get stopped out on the move, which you wouldn't be surprised to see. This would be kind of a pretty obvious local invalidation for these shorts up above these local highs that we consolidated under. A really nice confluence. Wick up with a quick move, take all that liquidity, stop out all the shorts before the move, and then price starts rejecting, some longs get trapped, and some of those shorts have to pile back in to the move. And what's interesting about this idea is just, and one of the reasons I want to stick around for it, is we could potentially see some really nice technical interaction with the timing confluence. And it would have to happen quickly. It either happens or it doesn't, but it's going to happen in the next few minutes if it's to interact with these levels with this nice timing confluence. So anyways, I think it'd be interesting to see. So the reason that I like a trending, whether it's a trend line or it's a parallel structure idea, this is a trend line that could become a parallel structure depending on how price progresses. It's just an idea. But the significance of a trending structure interacting with a horizontal structure is the timing. There's only one point in time when these structures interact, and that's here. If it hits, here you could leave some variation, I suppose, but if it comes here, it's not interacting with that trending structure anymore. So the timing confluence there can always be something to look out for. And the same happens if, a little bit of confluence here. If we got something like this, well, the timing could come in right at the parallel descending structure low at this level. So anyways, I think it's kind of an interesting idea, certainly. It's all tradable too. You could try trading something like this very short, very tight if you got the sweep, rejection, but, it's a 12-hour setup. I think it's reasonable also just to use the pivot highs above as invalidation. Still very tight for the thesis. But you'd want to see all those shorts getting stopped out, which I would imagine that would be reasonable. This parallel structure could also kind of help you fade. You could, that's the other thing, like a long here. Hold on. I've got too much going on here. Let's move this over. Does it make sense to target a long into that structure? It's pretty suspect. You really can't do it on a normal exchange. It's a 0.3% move. Of course, you could have a different thesis and target higher, but But this idea of a parallel structure makes this long make a little less sense. And sort of favors the long down here. So from an order flow perspective, you know, one of the confluences I'd want to be looking for is, so we have all this market selling and shorting coming in here. As we take these highs, you'd like to see a big increase in CVD and all these shorts closing, giving you some sign that the market targeted that liquidity efficiently. If it hasn't, then you might lean towards higher. But for now, still kind of rejecting on this trend line. This could be very clean. You know, and the more, I mean, that's like if you're scalping and you're looking at price action developing and you're thinking about order flow, it's okay to start, you know, charting some different ideas and thinking, what could make sense here? Like, what would be a really nice technical idea to target some of this liquidity of these shorts opening here? That could still result in lower. Some shorts starting to close. You know, a little bit of a spooky price action for them. Nothing major, but they have almost 1 million shorts covering there. Decrease in open interest. Yeah, I was thinking about doing something like this maybe once a week or once every other week, where we just spend a few hours on live stream and kind of go over these concepts. On lower time frames. And the time to do it is during these big moves, because that's where there's going to be a lot of people participating in the market, and you're going to see some of that more extreme volatility, and order flow is going to be more both interpretable on a low time frame and relevant. When you don't want to do it is in a weekend range like this, where you're really not expecting almost anything to be happening for days. But in times like this, certainly can be much more interesting and likely to get some interpretable price action on lower time frames. And you can apply these things to higher time frames. There's a little bit of a difference, but the concepts are all the same. Again, I'm not longing this, by the way. One, because I have reasonable targets below to look for longs. And two, because even this thesis isn't really particularly tradable on a 0.3% move. And of course, I could be completely wrong and price could just break out here. But the whole point is, I don't really have a thesis for a long here. That makes sense to me. So I'm not going to long it. Look at ETH. Just pressing up against these local highs on the 5-minute chart. Certainly, I mean, what would be confluent locally here with ETH? Just looking at some of these various pivots. This is probably the most clear one. You know, if I was looking to short ETH here, sure looks like ETH wants to at least do this, right? At least take these highs. That makes sense. That could be confluent with another impulse on Bitcoin. Well, this intersection is sort of fading away here. I mean, if you pulled it from here, it gets a little closer, but ignoring this wick doesn't really make a lot of sense to me. ETH just a range. I don't think there's a lot of confluence here on a low time frame. I mean, we have a potentially major golden pocket that's sort of a high time frame confluence for a short. I don't really see any likely parallel structures here. You could argue this as a potential confluence, but I think the trade setup here for a potential short would really just be as clear, most simply defined as taking this high, rejecting, and a stop above the new wick. All right, well, no interaction there. Let's see if we take these lows. Now, of course, this interaction could come as well, still be a parallel structure. But if we're going to interact with this golden pocket and sweep this low, price literally needs to go straight down. We need this to happen. Otherwise, this low becomes of interest. So 2 levels I'm watching here. Again, if I take a trade, I'm always using risk management, and I certainly don't suggest anyone trade ideas they don't understand or trade at all with live funds if they're not an experienced trader. There's no rush. Plenty of time to learn and back test and trade with either small sums of money or on something like the Trading Arena, a platform I'm building with a talented developer, which is a paper trading platform. Where you can test with fake money, different strategies and concepts. That would have been a sweet, sweet short though. If we got that little wick and impulse up into this descending structure. Nice selling here. Three, 4.3, 6.7 million negative delta. First key horizontal being tapped. This is an interesting long to me. All right, I am looking to scalp along here if we get a reaction. Woo! Not in there yet. I'd be willing to make the decision quickly though. I'll show order flow after. Willing to wait for this deeper level here. We're breaking down this range. No sense for me to try longing. If we reclaimed, I could try something like this. But we're not reclaiming. So far we're breaking down, so makes sense to me to wait for lower. And try something like this. A reclaim would be a trigger. But hopefully we just break the level down and go to the next level. A reclaim here could end in a stop loss. But so far, very easy to wait for this level below. This is very nice timing confluence with the parallel structure. As I was saying, if we're going to intersect here, price needs to go essentially straight down. This doesn't particularly concern me to long price action like this. In fact, I kind of prefer it, but it'll be waiting for this reclaim of this pivot at least. And if not, I'm waiting for lower. So some patience here. I did get a short up at the POC. That's very nice. And not taking any of these low time frame triggers has been nice as well, waiting for the deeper retracement. So I've faded taking some losses here on longs. Of course, I'd like to see lower. I do not want to long a reclaim at this point, but I might have to. Just because it's a valid trigger. Because this is so close. I love these confluences. So it's my ideal setup. But the reason I might have to long here, I'll show quickly, is simply the reality of order flow here. We almost have a bullish divergence against these lows. Look at all these. Some shorts opening 8.4 million, 7.4 million negative delta. This is a ton of negative delta. Tons of positions being stopped out. So it would be a technical trigger with order flow confluence if we reclaim this range. But I sure would like to take this lower level. So we're seeing everyone who longed up in this range above getting wrecked here. I certainly not wish, but I would have loved to have seen this little scalp short idea, because that already would be trading at, even with a stop above this high, at 4R. But it's all right. I had an idea to add to a short there, but didn't get it. So again, the structure here, yes, we have negative delta. And you certainly could just try to long on the big sell-off here. But for me, waiting for the reclaim is necessary. Right now, we're flipping it as resistance. I wouldn't be surprised to see the reclaim, but I'm at least going to wait for it. Because if the idea was sweeping this low and reclaiming it, we have not reclaimed it. So there's no reason not to wait for this level below, which is also very clean. And hopefully this gives me some higher probability chance of fading a level of interest. You know, the worst case scenario is getting the trigger and then stopped out. And if I wait and don't get a trigger, there might not be one, and I can just fade the move. And then I haven't longed anything down here, no scalps, and maybe just get the one that works. So this is the benefit of using market entries and waiting for reclaims and reactions. But lots of volume coming in here and negative delta. So it's also kind of a retest of this high. It's not really a ton of confluence there, but certainly a lot of volume. And very much willing to, again, walk away from this idea if we don't reclaim these pivots and look for these sweeps here. Can have nice levels, but still good to be patient and see, like, is the level getting a reaction? Oh no, I haven't blocked you. Oh, I haven't actually been reading chat here because I'm potentially going to take a trade. So just watching order flow and price action. Anticipating a potential reclaim here. Again, just based off of order flow, it's technically valid to long a reclaim here. I don't love it as much as I would love to come tap this channel, but I could probably trade both. We'll wait for the reclaim. For anyone just tuning in, I'm not in a long position here. I'm just showing how I would set this up. I would not be surprised to see this. But I'm willing to take it on the trigger if there is one. So we see some shorts opening, some longs closing. This is almost all market selling in this candle, like literally zero buying. Market selling, mostly shorts getting stopped out, or longs rather. We haven't really seen these levels retested, but you know, this is quite a bit of selling to have come into this candle and price to be bouncing from it. It's a nice 123.7 extension here. I'm going to start thinking about some Elliott wave like local corrective structures here, especially if we bounce here. Very clean trend line touch there as we front ran this. Look how clean that is. Oh, wrong screen. Yeah, so I was just pointing out we have the 123.7 extension here, and this trend line just getting a very clean rejection. Those were the two things I was noting. Starting to see some longs here open. 1 million right at the top of this candle. Right here. So yeah, this is a time where I would certainly be looking at live price action. I'd be looking at order flow because this is where I would be considering a long trigger. And so I'd be interested to see what's happening for sure as the key levels being broken down and tested. Just pointing out we have this $1 million long at the top of this candle. We're getting a little rejection off of it. So somebody longing whatever their thesis is, but certainly I wouldn't want to long here because it is before the reclaim. We're testing this local high. Personally, I don't try to there might be some other structures you could use for entries, but in a case like this I wouldn't try to predict a reclaim because then you're just longing a breakdown. This level looks very nice to me if we could wick into it. Looking for this as the reclaim, but we'll see. We will see. Back at the 123.7 extension here. Could actually get this level. I'm just playing with some different fibs. So if you tuned into my last live stream, I started building some low time frame. I don't know. Maybe it's a little generous to call them Elliott wave counts, but Elliott wave concepts maybe. And it can get a little messy. I'm just trying to quickly. The 1618 down here as well. Again, the ideal scenario here would just be no reaction, break this level, and head down to these lows. Fade the long again, keep riding that short. The most ideal scenario if it doesn't work. The worst case scenario, which isn't a big deal, you just take a losing trade, is to get the trigger, take the long, and then instantly get stopped out. Confluence with the structure looks nice. We have this idea up here, remember, but we didn't quite break in this liquidity and test this, but the idea was the impulse and then straight down into this channel. But the channel idea is still intact here. But hoping to fade the move if it doesn't work. But willing to take a loss. Got to get in somewhere. That would be a trigger, sweep and a reclaim. Okay, I'm going to be paying attention to order flow and the level here. We'll review it after here. I'm going to not long this front run. These little double bottoms can be frustrating, especially if they get a big reaction, but it's fine. I'm willing just to miss the long. I want that sweep and the reclaim into the key level. If I don't get it, that's all right. And you can see, like, I don't know, maybe, I don't know how everybody here trades, but it can be an extreme test of patience, right? And that's why watching low time frame price action can be frustrating or challenging for a lot of people, because you have a thesis and then you're watching and you're just take the trade early, take the trade early, take the trade early. Maybe you're interested in this level or whatever, but this happens and you find yourself longing here and you're longing every candle and you just don't have that impulse control. And what can be frustrating is you're thinking in your head, well, if I'm sitting here watching for my levels to come into play, I should be taking trades, I should be making money. I can't make money if I sit on the sidelines. And that voice starts coming into your head, well, we're going to front run the level, I'm going to miss it. And you start taking poor setups. So anyways, and you just end up losing a bunch of money. And so for me, I'm going to have to control. I'm not longing in front run. I want the sweep. I want the reclaim. If I don't get it, I'll miss the trade. Because taking bad trades consistently is not a good way to win. Being impatient is not a good way to win. If I don't get a single setup today, if I'm waiting, I mean, I am in a short from up here. It's not quite the size I'd like. Would have maybe added to it there, but maybe this level just breaks and I don't take a long, and then I'm interested down in the sweeping the pivots here and they just break and I don't get a long. I'm not going to take a trade just to take a trade. If I don't get a trigger, I'm just not going to take it. I'll wait for lower. Right, waiting for a reclaim. If no reclaim, then no trade. always using risk management. I could care less if I lose. I just want to take what I view as reasonable, valid technical setups with risk management. I'm willing to get in and try them if I think that they meet the criteria for a valid setup. If they don't work, they don't work. Preparing to take that long, and that's a trigger for me. We didn't come down into the channel. I'm running my stop a little bit wider than it's seen on the screen. But the sweep and the reclaim into the fib is a trigger. And it's not really a reclaim, it's more of just a wick reaction, but that's enough of a trigger for a scalp for me. Leaving a little bit of room if we come and take that, test that channel. And even though price is kind of wicked and we didn't kind of get that quicker reaction on my entry, I'm still not just going to close my position here because fees really start to add up if you do that. I'll just get stopped out. And I am thinking we're probably going to see lower here. Maybe come and test the channel. Or break down. Breaking down doesn't look too bad either, but we'll see. Just we'll carry the short lower and try long at the next level. I potentially triggered my trade a little early here, but there's a little bit of a trade-off entering in on that wick of the level. On a low time frame sweep like this, which is waiting can change the entire makeup of your setup pretty drastically if you get an aggressive wick. But this is not quite the reaction you want to see at this level. But we're getting a reaction off this key fib. But at a minimum, I'm expecting something like this to be somewhat likely. I do have my stop a little wider to allow for that tap of the channel. And again, my stop's so tight here that your fee to market close and market open is almost as expensive as your stop loss when your stops are so tight. So to open and close on kind of a false trigger here, it doesn't really make a lot of sense. If I didn't long the initial reaction here, I probably would just be waiting. But I'm perfectly fine to be long as well. I think I'm trading this within the realm of this level. But again, if we don't see this bounce here, like I'm not going to be surprised to just see price run through this level here. No structure. We have key retracements, a parallel channel idea. But if there's no bounce here, I mean, price is probably coming to these lows, which again, I'm going to likely be trading as well. So faded this one, didn't fade this one if we break down. Still have my short running from higher at the POC. And I would maybe argue we're getting a nice little local consolidation here, but I would maybe argue that I took that trigger a little too quickly. Potentially could have faded this move if we break down. But we haven't broken down yet. And of course, as I pointed out, the interest in this setup comes from order flow. We have heavy selling here. Almost a bullish divergence, or we do have a bullish divergence potentially forming against this low. If we do take these lows, which I'm not thinking is entirely unlikely, we probably have a bullish divergence against our impulse lows. So it's very interesting. And need to be open. Let's just remove this for now. That was a speculative pull. Need to be open to the idea of us coming straight to the range retest as well. Range high retest. That would be pretty nasty, tough to trade. Getting a reaction here though. Ideally I get out with a TP1. I don't remember the Dos Equis guy quote, but maybe I'll have something like when I take a bad entry trigger, I only take the ones that end up working. But nice clean reaction off the 618 here, at least. So if I hadn't entered here, I would have entered by now. And, you know, the quick wick here can be a little bit challenging, so your entry can end up a little higher. So that's the 5-second chart. Anyways, I'd be long regardless here by now, so is what it is. Kind of hoping that I oh, sorry. Anyways, I would have been long here anyways. I wouldn't have minded taking this testing this channel. We have the 1618 extension down there, and it's still in play, I think. We do have the reclaim, we have the fib bounce, so the perfect scenario for me would have been for this idea to do this. And the trouble with these descending channels is if you want to give your stop a little bit of room to account for the potential of tapping a descending channel, the more price travels along the time axis, the further and further that channel gets. And so it can't really stay your invalidation indefinitely, because here, you know, the stop becomes quite far away. So you kind of want to get it over with You want to tap it or break it down. Or it kind of stops being your invalidation trigger. Yeah, so I am going to be wrapping up this live stream soon. We're almost 4 hours in. Ideally, we get some sort of convincing move here. I mean, talk a little bit about that, but I do need to wrap up pretty quick. If we do break down, well, I'm looking at a sweep of these lows as another trigger. This gets tough. I won't go into the specifics of how you could decide whether to trade these local sweeps locally or trade them with a wider stop if you get triggers on them. That's more like nuanced trading concepts that I can't cover here. I would just say that if you're not an experienced trader, trading anything here can be tough, and you probably will lose money. And you always need to be using risk management on trades, which means that there's mathematical components to that. It's not just a phrase. So you should understand the math. But if we break these levels down, well, then I got to be looking to the range retest here. So I'm hoping to fade longs that aren't going to work here. If we don't get clean reactions and there's no triggers. Hoping to get TP1s out of the longs I do take, and so they're winning trades regardless. And ultimately, love the idea of tapping these levels down here, but willing to scalp some of this local structure. So we have a bounce, we have a reclaim. Our key resistance here, in my view, is can't ignore some of this descending structure. This descending channel is still worth looking at. Should be noted that this was pulled prior. Retesting this GP retracement takes us into these pivot highs. That is a very interesting idea. We will have broken all descending structures here, which I don't mind. Most relevant local resistances, I mean, you can just look at SR flips. This is going to be, I guess, the most local one. This, the more relevant one to retest. So I'll just explain that really quickly. I mean, technically, an aggressive TP1 here is like a 1 hour trade, or aggressive fully close here. But the concept here is pushing up and retesting these lows. This is just an S support resistance flip with support. We would sweep this high, which actually is our high time frame 618, by the way, which is kind of interesting. But anyways, we'd sweep that high, retest this, and this could be resistance. And, it could come in conjunction with this trend line. Breaking that could be relevant for a sign of strength. But anyways, this is how we do. We took a short, we took a long. Nice rejection from the POC. Of course, did cover. I took a loss here. It's not like I only win trades. But this is how I sort of plan out my trades. I don't even remember. I remember reading this. I wanted to mention it, but it was up higher. Yeah, well, thanks, Bishop. Bishop says, please consider joining Lucky's Discord and diving deeper in how to trade with precision. He's really underrated for setups. In brackets, he says that's the least important, which I agree. Setups are not the most important part of trading. There's so much more that goes along with it. But the learning and perspective alongside the community. Yeah, we have a great community. And, a technical setup and a technical trigger is such a small component of trading at the end of the day. There's so much psychology, risk management, and the math surrounding that's really important to understand. And you could have the best setups in the world, but if you're going to sit here and take 5 terrible setups for every good setup that you take because you're making emotional decisions, or you're going to take way too much risk on the setups that you are waiting for, and it takes 1 or 2 of those not to work for you to get absolutely wrecked because you don't run, say, a stop loss. You get emotional and you say, you know what, we have to bounce here, and price starts going down, and you start thinking, no, it's too good of a setup, we'll bounce, and you just won't cut the trade, and you think, oh, we'll bounce from here for sure, and price just keeps going down, and you think we'll bounce from here, and then you're stuck and you blow up your account in one trade. So those are the kinds of things you need to personally overcome. It takes a few of those bad decisions where you don't have that impulse control taking bad setups, or you don't have the ability to get out of trades. I get messaged all the time by people who say, well, they'll ask like, hey, I need some help. I'm in this short, or I'm in this long, and I thought price would bounce, or I thought price would reject, and now I'm about to liquidate my whole account because I didn't close it, I didn't use a stop loss. What should I do? How can I get out of this? And the reality is there's nothing I can do. I don't control the market. The only way to avoid those situations is to get out of the trade before that happens, accept the loss, keep it reasonable, keep it small, have a plan to get out in validation. If a trade doesn't work, it's not the end of the world. And avoid putting yourself in those really hard positions where you're at the mercy of the market, and you're just saying, I really hope that price comes back to my entry or gets me out at a reasonable loss, because people get in a position where they just feel they can't afford to close at an extreme loss. So you certainly don't want to be in those positions. But that comes with experience and time in the market and all those things. So anyways, trading, we could say like trading is about, oh, look at this great technical setup, I waited for this long, and maybe price goes straight up. That's what trading's about. You need to know what the market's going to do. There's high probability setups for sure, or there's even low probability setups that make sense to take. But that's, at the end of the day, not going to be your biggest hurdle in trading. So, anyways, well, I hope you guys enjoyed the live stream. Honestly, went a little longer than I planned, but wanted to sort of just stay on until I took an entry here. So, here we are. We caught the bottom. Price can still easily reject here. There's no, there's a reaction at a technical level. So this is the other thing I'll talk about really quickly. Taking a trade on a reaction, like say you have a short from higher, this idea of like the POC or whatever it is, and you want to take a long on a reaction. Taking a long off a reaction and like a low time frame reclaim can make a lot of sense because you keep your invalidation tight and you trade the level. I have nothing wrong with trading right around the level. That's my preferred style of trading. I have planned out technical ideas. I want to trade close to the level with as tight invalidation as reasonable. But that's a big difference from like a sign of a strength, like a market structure break. Like this is still, we have a reaction. This could become a significant pivot. It might not. But this is a bearish rejection so far. We're making a series of lower highs, lower lows, lower highs, lower lows. Some early signs of strength would be to start claiming this level and breaking out of this downtrend. Sign of weakness might be rejecting. Maybe there's a golden pocket here, key fibs, whatever. So you have your local resistance. And this would be not bode very well for the long if you start rejecting from here. Be better if we broke through. But it's nice to have the long from the key level at this juncture rather than trying to long like this, right? Or whatever. That's my preference anyways. I like to have the tighter invalidation long on the reaction at the key level, but understanding that there's no signs of strength would be it breaks in market local structure, not retesting as resistance, but breaking these levels, claiming them as support. And there's a potential that price just rips through, like this is going to be an important level to retest, that price just rips through all these levels, but it's not likely. And so, as far as profit taking and deciding when to move your stop and remove risk from your position, you want to see how price is interacting with these levels. Again, ideal scenario is just to rip through some of this local resistance. Probably not the most likely scenario, but we'll see. I just realized too. I usually update all my trades in the Discord. I'm quite certain. Sometimes when I'm on a live stream, I forget. Yeah, I think I did mention this idea earlier today. No, I did not. Oh, no, I did. I don't even know. No, I think I just talked about all this on the live stream. So sorry for the members who missed the live stream. I did forget to update this idea. All right, so again, we're testing this key local resistance here. Before I sign off, I'll just say we have a local golden pocket. We have the retest here. We don't have the trend line here, but we have a sweep of these highs. And this is where you start to expect to see a potential continuation of a trend, a downtrend. And you need to taper your expectations of a long setup taken here. So if you start rejecting. And so I just want to cover a couple things before I go. Sorry, I'm going to cover it quickly because it's all happening quickly. Okay, so this is low time frame order flow. As price starts pushing up into this level, what do we see? We see tons of longs opening up into this 5-minute candle and tons of longs opening up into this. 7.9 million positive delta, all an increase in open interest, 9 million volume, 2 million, 1.1, 2.7 million longs opening right at the top of this candle, with a big increase in CVD, a big increase in open interest. So what does this mean to me? Well, I don't like this long if we reject here very much, because we just had many millions of dollars of longs open and get absorbed right into this first local resistance. And if I'd been paying a little bit more attention, not skimming through Discord, this would be on something like Rollbit. I might have scalped a short here with really tight invalidation. And for those who don't know, Rollbit, just for scalping really low time frame price action, can be interesting. But we see all those many millions of dollars of longs open right into resistance, right into the first local resistance. And it's not hindsight. As price, before we broke up here, this is identified, right? This is like make or break kind of level for a long from here, where you're wanting to say, we want to claim this level. And it's likely to get a reaction here, regardless of if you're going to claim it or not. But definitely seeing those many millions of dollars of longs opening right into what my view is. And not everyone's going to have the same view of the market as I do, but this is just like the last place on the reaction you'd want to enter the long. Right into the first level of resistance that's going to tell you the probabilities being more likely or less likely of a bounce happening here, a retest of this range low, sweeping these local highs. We front ran the retest before, right into this key resistance. So anyways, and so here's the reason that these levels become relevant, and the reason that, like, when I can identify that this is going to be a key local resistance is because over and over again, and I believe it's the emotional impulses that the market triggers, people will long into this level. And for some reason, I don't think it's for technical reasons. Maybe someone could say, oh, we broke the EMA or we whatever. This generates a bunch of longs. And so it's consistently local resistance because for some reason people want to long into here. You get this reaction, this big impulse, so many longs open right into this level. And that causes it, that's part of the reason it's resistance. It's trapping that liquidity of people trying to catch this move, and now they have the potential to get wrecked. So what would be a good sign for this long? Yeah, I mean, it's kind of late to kind of review this kind of idea. you could consider closing the long on a reaction like that, and ideally as close to the highs as possible. Um, but for the long to kind of still work, well, maybe you start to see those longs getting stopped out aggressively before this low is taken, or here, and you could start looking at some local fibs. Maybe those stops are under here, wouldn't be unlikely. So maybe you see this, and you make the decision to say, I don't like this long as much, gonna get out break even or a little bit of profit. And if we sweep the low again and all those longs get stopped out, I'm gonna try a long again. So that's how I might navigate something like this. I would have liked to have just scalp shorted that aggressively, but I wasn't quite paying attention there, so it's all right. All right, well, here we are. We've covered a lot of stuff. Hopefully you guys found it all interesting, and we can see as we come into the daily close. Maybe we get some interactions at these levels, but you can see, I mean, price is still very technical on these lower time frames. There's certainly scalping ideas. And let me just touch on one more thing. I'm trying to kind of tie it all together here, leave with a kernel of wisdom maybe, but so the point I made about, you might have your short from higher and you're taking a scalp long here. The point I made about there's a difference between a reaction at a key level and a sign of strength. Would you want to close your short from up higher just because you got a little bouncier and a reclaim? Not really. You might want to try a long, but there's a big difference. Here I can just get out of the long either in profit, break even, slight profit, and it can be a bit of a hedge to my short. But a real sign of strength here would be claiming some of these levels. And right now, we might have anticipated, if you're trying to predict what's going to happen, you say, well, I'm entering along here. I think we will reclaim this level. But you don't know that $8 million or $6 million, $7 million of longs are going to open right at the top here until it happens. And right when that happens and there's a rejection, you can see, I could see how this bearish market structure might stay intact. And I should be cautious about this idea of signs of strength and reclaiming this level until we do reclaim it, because we're seeing a rejection on high positive delta. But so you might say I'm going to move my stop on my long or whatever you're going to do, but you're also saying I'm glad I still have my short here while we're maintaining a bearish market structure breakdown here. I might be willing to try longs, but at the same time, understanding we're in a local downtrend. All right. Yeah, this gets kind of tough here because the ideas are of getting in and out are very easy. If you're trading on something like Rollbit, I would personally I wouldn't mind getting out of half my position and putting my stop, essentially allowing my trade to be pretty close to break even, letting half of it run, but it's just not the reaction I like to see at this level, with 7 million longs opening it right at the top there, or 8 million. So that's how I would trade it. The thing is, whatever I suggest I would do, you want to do something that makes sense to you. Like, let's just say you have the same idea for a long here and you want to hold it up to here. If you close it or take profits and try to cover it at break even and this happens, or this happens, if you don't really feel like it's your idea, and it can be frustrating, and you think, I would have held my whole position, or I should have held my whole position. For me, I would like to hold my whole position if we saw tons of selling and bullish absorption. I don't really want to hold my whole position and leave full risk on, given the circumstances. So that's my personal decision. I can always find different long setups. But to me, taking some risk out of this position can make sense, and maybe looking to trade as a new setup, a sweep and a reclaim into that channel. And if we don't reclaim, just waiting for lower. And yeah, it can be a little frustrating when you wait for a position. Two things can be frustrating. You wait for a position and it doesn't quite look as good as you thought. And maybe you do get out at maybe only a slight win or break even, and you let the idea go, because maybe you took some profits and you move your stop to entry, and then your stop got taken at entry or something like that. I wouldn't always do that, but there might be circumstances you would. Or you take profits and then the trade goes drastically in your favor, and you kind of miss a big portion of the move. So that can be frustrating, but again, it's just tapering your expectations with risk reward and whatever you're comfortable with. But you could also say, you know what, I'm going to pretend I didn't even look at the chart here. I took my entry, I'm in, I have my invalidation, and I'm going to go for a walk. And I'm going to come back at the daily close and see where price is. And if I'm still in my trade, I'm still in my trade. If I'm not, because the difference is with me is I know why I would get in or out of a position, and I'm quite confident that even if I close some of my position, that I can just get back in. I have lots of different ways to get back into a trade. I can use some of the profits I captured from the small move to offset some of the risk of entering some of that position higher. And so for me, I don't need someone to explain to me how to get back into a position either. So there is some varying kind of ideas here, where the more experience you have, you can kind of find different setups if things start looking to be in your favor again. So anyways, I don't think there's anything wrong also with just walking away after you take the entry, and let your targets be hit or your invalidation. But I appreciate you guys, and those who stuck around for the live stream. I hope you found it interesting, and I'll chat with you all later.